Hey traders, Mike Sir here. Welcome back to my channel. In my past videos, I shared many technical tools that I use on a daily basis to analyze a price chart. I show you how to draw trend lines and identify price support and price resistance levels. But what if I told you that there is another technical tool that I use on a daily basis to help me confirm those key price support and price resistance levels? Well, in this video, I'm going to share with you a technical tool called Fibonacci Retracement. I'm going to tell you what it is, the benefit of using it, and most importantly, how you can use it to help you with your daily trading. So let's get started. The word Fibonacci is based on the key numbers identified by mathematician Leonardo Fibonacci in the 13th century. And the importance is in the Fibonacci sequence of numbers. So 0, 1, 1, 2, 3, 5, 8, 13, 21, 34, etc. You can see that each number in the sequence is basically the sum of the two preceding numbers, and the sequence continues infinitely. Now, I'm not going to go into more detail about the formulas, but the focus is purely on how the mathematical relationships can help you as a technical trader. So first off, let me explain to you what Fibonacci retracements are. It's a method of technical analysis to help you determine key support and resistance price levels. Now, the Fibonacci sequence of numbers whose ratios provide important price levels to which markets tend to retrace a portion of a move before a trend continues in the original direction. Now, with these key price levels, it can help you determine where to place your entry, stop loss, and take profit orders. However, some traders say that using Fibonacci tools don't work and is very subjective on what price points that you use. Now, I don't disagree, but if it's used correctly along with other technical tools, then it can be quite effective to confirm support and resistance price levels. Now, let me share with you how to draw Fibonacci retracement levels. It's drawn by taking two extreme points, usually a peak and a trough, on a price chart and dividing the vertical distance by the key Fibonacci ratios of 23.6%, 38.2%, 50%, 61.8%, and 100%. Now, once these levels are identified, horizontal lines are drawn and used to identify possible support and resistance level. The 100% level is a complete reversal to the original price level. Now, let me show you an example. Here you can see that I've identified the start of a price trend, which is referred to as the trough. And then what I would do is I would extend this line to the peak, which is right here. Once you identify the two extreme points, the Fibonacci tool calculates the retracement levels. The first level retraces 23.6% of the entire price movement. The next retracement level is at the 38.2% level. Then the next price level retraces 50% of the entire price level. The fourth retracement level is at the 61.8%. And finally, the 100% that retraces the entire move. Before I share more information about Fibonacci retracements, please stick around to the end of the video as I will randomly pick several charts, analyze using Fibonacci retracements for you, and tell you what are the key support and resistance price levels. Okay, let's talk about how to utilize support resistance price levels with Fibonacci retracement. It's actually very simple. All you need to do is, first of all, draw your major support and resistance price levels, then identify the peak and the trough of a major trend. Basically, if any of the key Fibonacci retracement levels match up with any of the key support and resistance price levels, then it confirms to you that those key price levels are very important and you should make a note of them. Now, let me show you an example. So first of all, what I'm going to do here is I'm going to identify the key support and resistance price levels on this price chart. So what I've done is I've drawn some horizontal lines here. You can see here there's a resistance level right here, and then there is a support level right here. There's also a support level right here extended across, and same thing right here, and then also right here as well. So what I'm going to do next is I'm going to utilize the Fibonacci retracement tool and overlay it on top of the chart. So I have over here, and I basically going to identify here has the trough and then extend it all the way up here. So I'm going to start right here and then extend it out. Now what I'm looking for right now is to see if there's any matching price levels on both the support and resistance price levels and the Fibonacci retracements. And you can see right here that there is a match. There's a match right here at the 38.2 retracement level. And you can see here that I drew this support line here. So what we can note is that there is a matching price level at $984. So what we've determined is that $984 is a key support price level for this chart, and we should look to buy at $984. Before I pick some random charts to analyze, please take a moment to like this video. I would really appreciate your support. Okay, let's choose some charts, identify the key support and resistance levels, then utilize Fibonacci retracements to confirm the importance of these levels. The first chart I'm going to take a look at is Bitcoin versus the US dollar. So first of all, what I'm going to do is I'm going to draw the support and resistance levels. So let's see here. There is a resistance level right here. And then there is a support level right here. And there is one approximately right, let's just say right here. And then right here. And then right here. So next I'm going to draw the Fibonacci retracement. So what we've identified, the start of this trend is right here. This is the trough. This is the peak. So what I'm going to do, draw from here, drag it, and extend it out. So what you can see here, you can see that I drew a previous support line right here. This is actually at the 23.6%. So this is actually a key support level for Bitcoin. And then the next level that is relatively close is the 38.2, which is at 53,000. So again, you can see my support line that I drew right here. So relatively close. And then the next level is right here, relatively close to the 78.6. Yeah, so the key levels that we identify based on matching support resistance levels and Fibonacci retracements is the 23.6, which is around 59,000, and the other one, which is the 38.2, which is around 50, I guess say 53,700. The next chart I'm going to analyze is Microsoft. So again, I'm going to draw the support and resistance levels. And you can see Microsoft has done really well this year. So there's a resistance level right there. There is a support right there, minor one. There is one right here. You can see resistance, and broke out. And then there's one right here. And then there's one right here. Right here. And then I guess what we'll do is we'll use this one here, right here at bottom in terms of the trough. So let's utilize the Fibonacci retracements. Let's use it starting right here. Extend it all the way out to here. And voila, you can actually see that this is one support level I drew, but you can see this is a strong support level that I drew right here. And lo and behold, it's actually the 23.6%. And the next one is the 38. It's not too, this is not too useful because again, I identified the support level right here. So it's a little bit above that. So that's not that important. We can see the 50% here. Is there any support? No, that there isn't. And then there's one here, 61.8. Yeah, you could say that right here. You can see the resistance right here, and then push. So you can say that one level, and then you can sort of say 78.6 here in terms of support level, and then the 100%. So in this case here, the only key level that I think would be relevant at this point is to buy Microsoft at the 23.6 percentage retracement level, which is $306. The next chart I'm going to take a look at is the euro versus the US dollar, and you can see actually this chart is actually going down, so we can actually still utilize Fibonacci retracements. So again, first of all, let's identify the resistance levels. So let's just say it's right here, it's one. Let's see, another one is right here. Another one is right here, you can see. Another one is right around here. And one right here. And then the last one is right here. So those are the support resistance levels I've drawn. So let's do the Fibonacci retracement. So we actually don't start from the bottom up since it's actually going down. We actually start from the top to the bottom. So the top is right here, which is the peak. And then we look at the trough. And you can see, wow, right here, the first retracement level, 23.6. There you go. This was actually another support level that actually broke. So that's a key level. And then the next one, 38.2, is relatively close. I mean, this line right here, close to the retracement, 38.2. The 50% level doesn't really help us. Yeah, a little bit. I mean, you can see some resistance right here, and then it broke down here. The next one, 61.8. Yeah, it doesn't, I mean, a little bit here, but really the key one's right here. The last one, the 78.6. Yeah, it's relatively close here. You can see this is the support level that I drew right here, and that's where it broke. And you can see here, this is where we started off from. Thanks for watching. If you like this video and want to watch other videos where I show you all the tools that I use on a daily basis to analyze the financial markets, please click on the left for more videos and click on the right for the full playlist. I'll see you in the next video.